JJ Kinahan, the TD Ameritrade IMX, the Investor Movement Index, was down, let's call it 9.1% in September. I guess that's to be expected because the S&P was down around 7%.
Right, and it's not just, Greg, people selling stocks. What's interesting about it is down, but it also takes into account volatility. So although our clients were actually net buyers in their accounts of stocks, what they did was they rotated out of some of the higher volatility stocks into some of the lower volatility stocks, maybe trying to take advantage of some of the stocks they thought were oversold.
All right, one stock which got bought in September was Apple. And I guess that's because they had a new product rollout, a lot of hype surrounding the new iPhone. People were buyers.
Well, and retail traders love Apple. Let's be honest. It was our #1 held stock last year at TD Ameritrade. It's our #1 traded stock every single day. I shouldn't say every day, but for the year last year, it was the #1 traded stock. People tend to have a real fondness for Apple. Even those who may not participate in some of the rest of the market, they participate in Apple.
Dividend stocks and a number of energy names also got a lot of attention during a big sell-off. So Chevron, ExxonMobil was bought, Verizon was bought. Why was that?
Well, if you think about it, you're talking about 4% plus yields. So we had the Fed meeting last month. The rates didn't change again. And this gives clients actually exposure to two ways. They get a derivative exposure to energy because, as you mentioned, they are energy stocks, so crude oil, et cetera, which has been beaten up recently. And at the same time, they can get a yield that they're having trouble achieving elsewhere in, I'll call more, these are Dow Jones stocks. These are considered more blue chip, less volatile type stocks.
Also, perhaps under the radar, traders were nibbling away at media stocks. We had a big sell-off in Netflix and Disney this summer, but in September, they came back. People were buying these.
Yeah, it's interesting. We talked about it over the summer, you and I. And I know, in the media space, people are like, oh my God, is everyone going to stop using traditional media? And I think it's clear they're not going to. And maybe some of that was overdone overall. And it's one of the more interesting spaces, as we both know. And again, when you see things get overdone, people will, and as you said, start nibbling. And it's good to see them nibble rather than being all in or all out overall.
And on the flip side, finally, JCPenney. That was a net sale in the month of September. Stock was doing well. I guess people use it as an opportunity to lighten up.
Well, yeah, JCPenney, Motorola Services, those are two stocks that were near 52-week highs. And one of the interesting things, as you said, September was a rough month for stocks overall. So I think when people saw things that were bucking the trend up near 52-week highs, time to pull the trigger on some, take some profit, and maybe look for some of the things that did get beaten up.
All right, one more question. Of course. October has normally been a bear killer. October is usually a great month for stocks. So just give me your feeling about October.
Well, so far, the last few days at least, October has been incredible. I do think the #1 thing to keep in mind, although volatility, the VIX, as measured by the VIX, went under 20 today for the first time in over a month. I still think volatility continues because at the end of the day, we have the 500-pound gorilla sitting in the corner of the room being the Fed, and if they move at all, the market reacts big. The difference now is we're trading on some numbers we can actually trade on, but we're all keeping one eye over in the corner of the room because we know it could change at any moment.
We're going to keep watching it. Thanks,
Always
JJ.
Always a pleasure, Greg. Thanks for having me.
And thank you for watching The Street.